Well, Theo, this is the final newsletter update for 2021. And it's really been a difficult year, I guess, for everyone around the world. You know, whether it's kind of new waves of COVID and new variants and stock markets going crazy, you know, elections in South Africa, you know, delivering results that were to an extent unpredicted and will deliver an even more unpredictable future. And, you know, and then politics around the world also not that stable. Just a very tough, uncomfortable year for everybody. And I guess we're all a bit full of COVID as it is. And, you know, we all thought it would be over by now in one form or another. And so looking at that, I thought it might be an idea for us to kick off with the municipal elections. Just some thoughts on that, and you know, and then let's go from there.
Hello, Warren. Yes, it is certainly an uncomfortable year, and unfortunately, it seems that right at the end we get another curveball, which we were dreading. But if you look at the municipal elections, it was the 1st of November. The key is, for me, the key takeaway is, if you assume that South Africa's population, the eligible voting population, that means those people that are older than 18, that have the right legal documentation, if you assume that to be 100 people, that's roughly, just to put it in context, it's around 40 million people. But if you assume that was 100 people, first of all, 33 of those 100 did not bother to even register to come on the voters roll. So a third of the people that could be on the voters roll doesn't even bother to go on the voters roll. Secondly, in this municipal election, so for the balance, 36 people then decided not to pitch and go and vote. They just decided they're not going to vote. So in the end, out of this 100 people that are of voting age, only 31 went to actually vote. Of that 31, round about 14, and I'm rounding these numbers, 14 voted for the ANC, 7 for the DA, and 3 for the EFF. So the ruling party in South Africa, our biggest party, only has 14 people out of 100 actually voting for it. And I think that is part of the conundrum. It's either meaning that we are a mature democracy where people trust the bureaucrats, which unfortunately is not the case in South Africa, or there's a kind of an apathy, and there's various reasons for people not to vote. But the simple fact is less than or around 31 out of 100 people is part of the election process, and that's disturbing. In terms of the outcomes, I think there's a few themes that's important. The ANC, which is the biggest, still the ruling party in South Africa's vote, is now firmly below 50%. On a national level, if you look at the various provinces, the ANC would struggle if this was the same voting pattern we would see in national elections. And number two, we saw a lot of individuals or smaller parties come to the fore. In Gauteng, we had Herman Mashaba, Action SA, and then you have things in the Western Cape, in the Cederberg area, you had Cederberg Eerste, who happens to be the leader of Cederberg Eerste, is now the mayor of that area, of Klein Willem, Citrusdal, those areas. So you saw that as well. Now, that doesn't necessarily do exactly the same when you go to a national election. National elections, national issues. But the key points from here onwards is that the ANC is probably now firmly below 50%, which means some form of coalitions will be our future going forward from here onwards. The question is just, where will we find that partnerships? Unfortunately, I think a lot of these coalitions in the metros are not going to be stable coalitions, simply because it's coalitions which has got one thing in common, and that is not to give power to the ANC. The problem is, if you come to votes of no confidence, budgets, strategic decisions, it's going to be difficult to toe in the same line. But we had a fair election, we had a free election. The majority party is below 50%. There was no major issues around that. It's good for democracy. We'll just have to see how it pans out. But I think the next on the political front is in the middle of next year, we have that ANC's General Conference, which is a policy conference. And then at the end of December 2022, the Leadership Conference of the ANC. There's still a lot of water to go under the bridge. And as next year develops, one will see what the position is of Mr. Ramaphosa. Is he going to get challenged, and what the role of this election is? But that's in the politics. On the economic side, Warren, there's a number of tussles uncertainties. How do you read that?
Yeah, I think, Theo, the major theme coming out of the US in particular is around inflation. And so, for a long time, if we go back to what the Federal Reserve was doing in, after 2008, the financial crisis, they dropped interest rates, they put in massive stimulus into the monetary system, and there was forecasted inflation. Everybody that had studied economics would have said to you, if you do that for a long period of time, it's going to cause inflation, and it never materialized. However, this time we're seeing an impact of inflation. And initially, a lot of commentators were saying, this is what they call transitory inflation. In other words, we had very low prices, around March, April, May last year, because, the whole world's economy just came to a stop. And so prices collapsed. And so if you jump 12 months thereafter, if the prices were at a very low level and they just normalized, to the year before, then you would say, well, from here to here, that's inflation. But if it's transitory, then it means in the 3, 4, 5 months thereafter, you shouldn't see prices continuing to rise. And unfortunately, in some sectors, that's exactly what we're seeing, is that prices are rising. And the question now is why? And economists are arguing this point. It's, we're in a live global economic experiment where we've got huge supply constraints around the world. We're not seeing goods moving out of ports and into the kind of economic system as fast as they should. And that's from China right through to Los Angeles in the States. And that question is, if we have these supply constraints, prices will tend to rise, and we're seeing it in everything. Microchips are pretty much part of our lives now. If we didn't know it before, we now know that they form part of almost everything that we use, and major constraints in the supply of microchips as well. And so prices just continue to rise. And so, the reserve banks around the world, led by the American Federal Reserve, are wondering what to do. Do they start to raise interest rates faster than anticipated? Do they take stimulus, financial stimulus away from the economy? And that debate is causing major uncertainty. And so, that story is something we're going to watch through the whole of 2022 to see what goes on there. Even in South Africa, we've seen the Reserve Bank here raising interest rates by 0.25%. Now, on its own, it's not a major jump, in interest rates, but the signal that it sends is there. And so now with this new wave or new variant of COVID, the question is, does it push the inflation debate out somewhat? Are we now saying, well, globally, there might not be the demand that we had in the past because lockdowns will become a feature of Europe and the US and maybe the whole emerging market world again, in which case maybe inflation isn't as big a concern as it was 3 months ago. But that's not good news, because it means that the global economy is slowing down again. So long story short, I think we're in for another period of new uncertainty for old reasons now, and so I think for me, we don't do predictions as a business as Galileo. We never have, we never will. But what we do know is that unfortunately, uncertainty is just not going to go away. And then you add, the local uncertainty around the municipal elections, as you've brought up, and what that will do for the Gauteng, especially, the Gauteng coalitions and eThekwini in KZN. None of these are stable. And so I think we're in for another year of major uncertainty everywhere. And so for me, I guess it's becoming normal. We're becoming accustomed as individuals and as a country, even as a business, to this uncertainty. And unfortunately, we are going to get fatigue, all of us. If we haven't already got fatigue, we will have it. And then it's a case of saying, what sort of decisions do we make? How do we stay calm, sensible, rational when people are getting fearful? I think that the first announcement of this new variant showed the markets just imploded on themselves, and then the very next day, that was a Friday, but the very next day on that Monday, the markets were rebounding very strongly. So the truth is, when we're making investment decisions, to kind of develop knee-jerk reactions in a time like this is just not good. I think the only thing I can say to investors is, if you have cash to deploy in those times and you see a knee-jerk reaction like that, take advantage of other people's overly emotional reactions, because they are presenting buying opportunities. But beyond that, I wouldn't become too pessimistic, too fearful. It's important to remember the JSE, reached an all-time high in 2021, and we, it's unlikely that that story unwind itself completely in 2022. There are some good news stories for us to understand as an economy. So I'm not too worried, Theo. I'm also not too excited, and I think that's probably a good state of mind for an investor. Is you're overly optimistic or overly pessimistic, you're probably making a mistake.
Yeah, I think the structure between inflation, interest rates, growth, pandemic, to rely on predictions, you're going to get it wrong. There's just too many variables in this mix: inflation, interest rates, economic growth, pandemic. Now you add the supply chain issues. It's very difficult. What is true, and what we are seeing in company results, is companies use the last 12, 18 months to make sure that they lean and mean in the best possible position going forward. So we are seeing strong company results, not necessarily because of the very strong economy, although it plays a part. When you compare this year's results with a full-blown lockdown results of last year, it looks very strong. But if you start to look through it, a lot of companies really focused on getting their companies in better shape, getting productivity up, cutting their cost base, making sure they're rightly positioned. So that is a benefit. But then again, those benefits, one must be careful. If the headwinds continue to remain turbulent, that's also not a given that we will see those factors. But if you then take this uncertain environment, if you take the uncertainty going forward and you bring it all the way back to our proposed portfolios and our strategy, is there anything in here, Warren, that you would want to change in terms of our underlying portfolios and our strategy?
It's a conversation we have a lot as a business, and certainly you myself, and Pragnesh, who heads up our asset managers, we talk about this all the time. And in preparation for this conversation, I was asking Pragnesh what we would be changing in the year ahead, knowing what we know at the moment. And between the three of us, I think the only big decision we would make in a time like this is, if we've got large lump sums to deploy and the markets are incredibly volatile, we would probably extend the phasing in period from our usual 3 or 6 month to let's say 6 to 12 months would be the kind of conversation we would be having with our clients. But the underlying holdings that we have in our portfolios are so well diversified, so well structured that there's nothing that's really concerning us where we're holding something that we believe is incredibly overvalued and is likely to cause permanent loss for a client if they continue to hold it. So we are very carefully monitoring those portfolios. We're making sure that the diversification, the asset mix within the portfolios is sufficient to protect investors when markets go down. Naturally, we don't know when the markets will fall, and all our portfolios, I'm sure, will take a knock if the global markets fall by 30 or 40%, but it's unlikely that our portfolios fall by the same amount. Not because we're making genius predictions and investing in something new that's going to float above gravity, but just simply because of the diversification that we've built into the portfolios already. And we are very careful to chase assets that are very expensive. So we are well positioned. I think we are reasonably cautious, quite conservative. We're not deploying cash at a very fast rate at the moment into local or global portfolios. And I think we'll continue with that caution for now. But we're certainly comfortable that the portfolios we hold are really well structured for volatility. And I think they've delivered really good results in the last few years, and not because we're chasing only tech shares or only biotech or only one theme. They're doing well because they are spread across so many different sectors, across so many different countries in the world. So the short answer is, I feel a little bit like the guys who designed Porsche 911s. We're not going to change the whole design of the car in the 6 months ahead because the design was already very good, and any changes will be tweaks. They'll be small and not dramatic in nature at all.
The other element obviously is for people that we've been saying that you should take if you want offshore exposure or increase offshore exposure. We had a certain range in terms of the rand, and that top end of that range was against the dollar about 15.50. And we've been saying for months and months and months, that's our range. Now we're outside of that range. Your view in terms of strategy, how should one approach that?
Yeah, I think you're right, Theo. We've had that view for quite some time now, and at some points we were looking silly when it was at 14 rand, 80 to the dollar, and we were saying 15.50 is our level. So when when the rand is over 16 to the dollar, we're maintaining our level for the rand dollar for now because we think that it is still the fair value. So we wouldn't be sending large lump sums of money out at 16 rand to the dollar. In a blind panic just because the rand is weakened. We still think fair value is 15.50. So if you have got big lump sums to send out, our view is let's be patient, let's wait. If you've got no offshore allocation, then we might start to phase some of your purchases of dollars even at these levels, but we would do it in extended periods over maybe 6-12 months. But certainly if you've already got very good offshore exposure and you're simply looking to top up your offshore allocation, we would be patient now and wait for the rand to come back. When it comes back, we don't know. It could be a matter of hours or days, or it could be a matter of weeks or months. We simply don't know. But we do have a good idea that the 15.50 is a fair value for the currency. And history has shown us that if we're patient, the rand does come back to us. And certainly that would be our view now. Is patience is difficult to be patient when markets are crazy and volatile and politicians are jumping up and down and doing silly things. But from our perspective, it's a simple thing to say, be patient. We know it's difficult, but we think that is the right strategy for now. Stay at 15.50, wait for the rand to come back. And if you need to increase your exposure to the stock markets, whether it's South Africa or globally, we will be phasing in over time, and we will be patient with those allocations as well.
Well, Warren, I think that that is probably, we covered the local market, we covered politics, we covered the economy, the uncertainty. I think all is left is just for everybody to say this has been a very difficult year. It's been challenging not only for fund managers, for wealth managers, for clients, for families, for friends. It's been a challenging year. And I think we have to appreciate that people struggled through the year. It was not an easy year. And I think now that we're at the end of the year, from my side, and I just want to thank everybody. I want to hope that everybody has a safe break, those who's able to have a break. And I hope that we look back in this year and we rather say, look, we've come through this year. We had volatility, we had uncertainty. It is going to be the theme for the early part of next year. But one thing that you can be sure of is the portfolios and the advice that we've structured. We are absolutely cognizant of both the upside and the downside. And we structured it in a way that we're comfortable with, that should markets stay volatile, should even volatility increase, we are comfortable with the position of our underlying recommendations on our underlying structure of the assets in the portfolio. So from my side, thank you very much. It's been a challenging year. But everybody, we're trying to stay rational, and I think over the last year it was challenging, but yes, I think our advice stood the test of time, and let's hope that we can continue to achieve that objectives.
Absolutely, Theo. And I think, I just want to echo that from everybody in our business. We really are deeply grateful to all of our clients who, have maintained the faith in us and are able to listen to the advice that we provide. We know we don't always say the easy things to follow. Sometimes it's difficult, but we appreciate your faith in us. We appreciate the confidence you have in our process. We certainly are, we don't take for granted the trusted relationship we have and the responsibility we feel very deeply, but we do take it seriously. And certainly if I look inside our business, we might challenge each other all day long to make sure that we're giving the right advice. But by the time we talk to you, we are confident. We know what we know what we need to say. We don't always know what's going to happen, but we know we've got the right tools to help you navigate our way forward. And then just on a very personal level, I think we need to make sure, all of us, that we understand COVID is something we're going to have to live with now. It's not going to just be out of the system, by the first quarter of next year. And I think psychologically, if we kind of prepare ourselves that it's something that as a country, as a global economy, we're prepared to live with it and understand that we're making decisions, and COVID is part and parcel of those decisions. then it's easier to bear when things don't go 100% according to plan. But if we just expect that, by this time next year, it's just going to be a thing of the past, and it's not, that's a very difficult thing to get past. And I think for me, trying to reflect on why 2021 was so tough, I think that's part of it. We all just felt, by the end of 2020 or the first quarter of this 2021, it'll all be over and everything will be fine. And we're learning differently. So I think maintain your kind of stability if you can as individuals. Maintain the view that this is something that will get worked out of the world system, but it won't be something that'll just disappear. It'll be something we'll figure out and then learn to live with, like we do with flu, every flu season. So I think from all of us at Galileo, thank you so much for the year, and we look forward to being there with you in 2022, and Theo and I will do our best to keep you informed as we go.